Hey everyone, welcome back to Crypto Crayfish. Today we're going to have a quick one, and we're going to talk about this chart right here, global liquidity and what it means for Bitcoin. Okay, in general, if you are unaware of kind of some of the basics of economics, I encourage you to look into it. We talk about it on this channel. Basically, as money supply in the world grows, risk assets tend to do well. Okay, when there is more extra money sloshing around in the whole world that people are not spending on food or rent or whatever it is, they are able to spend it on speculative assets. Okay, that looks like things like potentially Tesla, right? It's a company, it makes money, but at the same time, it's at a huge valuation. I think it's potentially justified, but right, it's a speculative asset. Then you go even farther down the risk curve, and even more risky and more speculative is Bitcoin, right? Bitcoin has no earnings. It's not a company. It just exists. It is the definition of speculation. And then you want to go even further, we get to altcoins, right? We get to meme coins, things that have literally no value and arguably are scams, and yet people put liquidity into them if there is enough global money supply in circuit. Okay, and you can see how well this lines up, right? It's chicken or the egg. Okay, it's similar to that piece of news follows price rather than the other way around. So a lot of people, they look at the news trying to figure out what the price of an asset's going to do. It's arguably is the other way around, right? No matter what the price does, news will find a way to explain it. I would say this is a similar chicken or the egg, where look at this correlation between Bitcoin and money supply. Okay, so I want you to look at, here's the first bull market, right? Bitcoin gets this major blow off top in 2013. Amidst all this, this is the year over year M2 supply growth. Okay, blue line is the actual numerical value of M2 money supply up and to the right, right? Bitcoin up and to the right. And then you've got the green and red in the background, which are the year over year change. So you can see when M2 was growing the fastest is when Bitcoin peaked, right? Then M2 actually went into a contraction for a while. And when it was contracting the fastest, that's when you see these bear market lows from Bitcoin, right? You see that? Then we get this next cycle. We get this first wave of massive growth that kind of starts the bull market, and then you get this second, even higher wave that led to this massive blow off top in 2017. Okay? And you can see right around when that peaked year over year is when Bitcoin peaked. And then you got this descent again, and you actually only briefly went negative in 2019, but it did go negative. And that local low marks the bottom of that bear market for Bitcoin. Okay, now let's look at this next one, right? We see this first wave of liquidity come in. It leads to this first move in Bitcoin. You get kind of a stall out where Bitcoin does a little bit of a consolidation, and then you get this massive move in liquidity, right? Which was the printing out of COVID. And boom, right? Bitcoin follows. It tops out right about when that year over year change is the highest. And then we head into bear market when this is the lowest year over year M2 money growth is about when we bottomed. Okay, so you're definitely noticing the trend. Now let's look at our current cycle, right? We are looking at a scenario where, especially compared to COVID, even compared to this peak back here, which was pre-COVID, back in kind of end of 2017, we're not hitting that much, we're not hitting that much liquidity yet. We're about at the levels of the first wave of liquidity, year over year change wise, as the first wave of liquidity in the 2016-2017 market. Okay, so that's what we've put in, and you can argue that we've seen, right? You can look at this Bitcoin black line. It's hard to point at it. Okay, so right above where my cursor is, you can see that initial peak in Bitcoin, and then you had this pullback consolidation phase, and then it kind of went higher as the liquidity came in aggressively. Okay, now let's look at our current. You have this big peak, and you have Bitcoin who just kind of put in that peak a little bit after, and now we've had this pretty aggressive come down. It didn't go negative or anything, but we stopped M2 money supply growth. And that wasn't necessarily because of the central banks. That was also because the US dollar has been going up in value, right? And what that means is that a lot of other currencies and other countries use our currency as a reserve currency. And so the fact that the US dollar was going up in value made things more expensive. It made debt more expensive. And therefore, global liquidity actually suffered from that. Now, since Trump, since this more recessionary environment that we've been seeing the last few months, global liquidity has been on a tear, right? I can go to a year, and you can see here's this first wave. Here's this, here's the lowest point we got, which was actually December. And then since then, we've been moving up aggressively, okay? And as the US dollar continues to drop more, right, it's only going to get more accentuated. Additionally, what they call the money printer, right, this huge bubble of liquidity, not the first part, but the second part, the big bubble, was because the Fed turned on quantitative easing, okay? The US printed a whole bunch of money, and that is what cascaded Bitcoin into this massive peak, okay? Are we arguably seeing that again? Right now we're in quantitative tightening because we've been worried about inflation, but as the economy weakens and as the markets struggle, Fed Jerome Powell is going to have to start considering going back to QE. I think if we see good inflation numbers this week, that could really help define that. So have a look out for that. And that is generally how this tracks. If you go on Twitter, you can see that people have varying timelines for it. It's thought that generally between about 2 months and 3 months is when the price of Bitcoin follows the liquidity. Okay? So what does that mean? It means that right now, this low, right, which we got in end of December, is becoming due. Okay? So end of December, 2 months from that puts you at end of February. Wow, when did we have our first large Bitcoin drop to below 80K? End of February. Okay? And remember, it's between 2 and 3 months, so we're arguably still in that weak period. But as you get this resurgence starting to come into the market, we should see, Bitcoin start to do much better. And that's, a few weeks away, right? Because this only happened, we got this low in December, and then this next kind of move up was a pretty aggressive into January. So about 3 weeks to a month. And if we saw those lows end of February, it should be 3 weeks to a month from that, which also coincides with options expiration in the stock market, which is March 21st. And traditionally, once that period of options expiration between February and March for the stock market is a week period, and after that, markets tend to do much better. So there's kind of an aligning of factors that I see, and I just wanted to point this out because it's a nice thing to track, especially if you're having a little bit of a harder time with your mentality, right? So if you're really stressed, you're struggling to sleep with some of your crypto assets or even your stocks, this can be really nice to look at, and it can be really nice to kind of focus on the bigger picture of, okay, we're not in, contraction of the M2 money supply year over year. Overall, these should be building up towards kind of these liquidity ramps that tend to happen every 4 years and would be very consistent with the end of a tightening cycle by the Fed as they continue to ease this M2 goes up a lot with rate cuts as well. So that's arguably why you saw this first wave of M2 going up a ways in September. Is you got 2 rate cuts in August. Okay, so as we get more rate cuts, it will also push M2 a lot higher, and potentially we could get quick rate cuts if the economy really starts to panic, which arguably I think we saw some of this week with the Nasdaq down 4.5% in a single day. So that's really all I wanted to point out. Feel free to track it, and we'll keep talking about it on the channel. It's a helpful tool for your mindset and for your portfolio. Thank you for watching, and I'll talk to you soon.